Hey everyone, I got a great question on TikTok the other day and I got my notes over here, so if I keep looking over here it's because I'm referring to them. The great question was, what are 3 to 5 things that you do before you make a trade? But I'm going to lump them together and say trade or investment because the first 4 things that I do are trade related, but they're also, the last 2 are investment related, but I use them for both. The first 4 I use whether I'm investing or trading. So the very first thing I do before I make a trade is I look at the charts. I want to see the general overall, oh wait, hold on, I have to make a note. 3 months. I could probably edit this out, but I'm not going to. The first thing I look at are the Bollinger Bands. If I'm making a trade, I want to see when the best time to enter or exit a position is. So if I am looking to buy this stock, I'm buying the dip, right? I'm swing trading. Let's just say I'm not day trading, I'm swing trading. I want to buy it on a down day, hold it, and sell it on an up day. One of the things I look for is a big drop in price, but not just any drop in price, right? You can see here at the open it's around 1946. It hits 1960. And then it suddenly starts dropping. It crosses below the 20-day. It crosses below the support line here. This is support. Double And it keeps dropping. The thing that I look for is an end to the selling. Once it crosses this 30 line, it's an indicator that the stock is oversold. In other words, there's too many people selling, and it might turn around. I've talked about this in other videos. Some traders like to buy this little bounce. They don't care if it's going to break out to the upside. They don't care if it's going to have a rally and go higher like it does here. They want to buy a quick turnaround. So they might buy here at 1771 and sell up here, my head is in the way, at around 1850 or 1840. This is a quick trade. If it pushes higher, who cares? For them, they're looking to get the bounce off of the lows of the day. So this is one opportunity. This is one thing I look for. The other thing I look for if I'm looking to buy a stock that's breaking out to the upside and I'm looking to get in is a breakout like this. Multiple breakouts to the upside, lots of volume. This is volume, so this is the 2 things I look for on this chart. The next thing I look for is an opportunity to exit. When am I going to sell my day trade or swing trade or investment? Well, maybe a little less to investment. I look for the overbought indicator now. So this is oversold, means too much selling is happening and it might recover. This is overbought, which means too many people are buying and there's going to maybe be some profit taking around here. So if I buy the stock, say down here after hours at 1702 and it gets up to 1802, that's a $1 gain. If I have 100 shares, it's a $100 profit. If I have 200 shares, it's a $200 profit. And as it's going up, I'm waiting for it to cross this line. Now once it crosses this line, it's no guarantee that it's immediately going to go down. It's just an indicator that it might. So at that point you have to say, am I happy with my profit? Do I sell here? So these are the first thing that I look at. The second thing that I look at is relative strength index. I'm looking for my time to enter or exit. MACD is the last thing I look at because you can see over here, if you notice at the relative strength, right where if you follow the little line on the screen, right on that relative strength is saying that it has been now oversold and might be turning around at that level. But if you look right below on MACD, it still looks like it's heading down. It's not until here where it starts to cross back over and indicate that it might be heading higher. So it does lag behind. It's not the greatest of indicators, but it is still an indicator that I like to have on my screen. So those are the first 3 things that I look at when I'm making a trade or investment. I'm looking for the best time to enter. The next thing I do is I come over here and I look at the news for the company. I always want to see if the stock is dropping, like on this day over here, if it's tanking really, really hard, I want to come over to the earnings, I want to come over here to the news, and I want to see what's happening to this company. Why is it down so significantly? Why is it dropping? Why is it tanking? If it's something really catastrophic, really bad news, maybe I don't want to go near it, right? So even if the chart is looking promising, Maybe the news is enough where I go, I'm not sure I want to put my money into something like this. It seems really risky. It seems really volatile. Next thing I do is I come over here to the news and the ratings. I mean, not the news. I come over here to the ratings. Now, a lot of people like to buy the beaten down, neglected stocks. They think that the slightest bit of good news will send the stock skyrocketing, right? If they have mounting debt, and then magically one quarter their debt actually decreases, wow, amazing. Or if they have revenue and the revenue is going down, and then it just kind of goes flat, it doesn't go down that quarter, whoa. Is this the midst of a recovery? Is this a turnaround story for the stock? So some people like when they see every single analyst saying, fuck this stock. Some people don't. Some people want to buy something that is popular, that is well regarded and well liked, especially if they're putting their money into it for a long-term hold. Personal choice. The last thing I want to do is I want to come down here, not the last thing, one of the things I like to do is I like to read the earnings. This is for investments though. Less for trading. Still valuable for trading, but a little bit less. You know, trading earnings into earnings can be very risky because it's a crapshoot. It's either going to go up or it's going to go down. It's going to be good or it's going to be bad. You don't know what it's going to do. So is it something that if it's a volatile stock, if it has historically bad earnings, is it something that you're going to want to put your money into before earnings? Maybe, maybe not. That's why it's important to come down here and look and see when the earnings are. If I'm thinking of making an investment, but then I come over here and I go, oh, earnings are just a week away. I'm not sure how I feel about that. Or potentially, maybe I go, earnings are a week away. I was planning on buying 200 shares in this company. I think maybe they could have good earnings, so I'm going to buy 100 shares instead. I'm going to buy 100 shares. If their earnings are good, at least I got in the stock before earnings. If their earnings are bad, then I can average down and buy more when it drops. That's for an investment, mostly. Trading earnings as a day trader is also a great tool because as you get closer to earnings, stocks skyrocket on anticipation of good earnings, so you can trade into the earnings but not on the actual day. Because it's a little more risky. But leading up to earnings, you might see that a stock is going up and up and up, and everyone's like, well, their earnings are coming out on Friday. Everyone's piling in because they think it's going to be good. You can ride that little bit of momentum. You can swing trade it. Buy it on Monday. Earnings are out on Friday. You can hold it Monday, Tuesday, Wednesday as it's going higher and higher and higher. And then if you think that their earnings are going to be bad, you can get out. If you think their earnings are going to be good, you can stay. If you want, you can hold some of your position. You can lock in the profit on half or more than half. It's all up to you. One of the last things I like to do is I like to come over to fundamentals. This is for investing only. So this is where we now separate from trading and investing and just focus on the investment aspect of it. If I'm investing in a company for the long term, I want to know some things. I want to know that their revenues are up. I want to know that they have a lot of cash. I want to know that they have enough cash to pay a dividend if they do pay a dividend. I want to see that their debt is decreasing, right? Or that they have eliminated their debt. I want to see some of these things, so it's important to come through, click on balance, click on income, click on cash flow, read these things, familiarize yourself with the company to see if it's a good, solid, if the fundamentals are strong. And the very last thing that I like to do, especially when I'm making an investment, is I like to click on the 3-month chart. The 3-month chart, which will show up right now, doesn't look so good actually. Let's look at the 6-month chart. Better. 6-month chart, 3-month chart, they give you indications of where the stock has been, where it's going, what the trajectory is currently. So if we were looking back 3 months ago, this is the chart we would see. And we would say, ouch, this thing is heading incrementally lower. At some point, I would like to make an investment in this company. But when? Look, relative strength, still I pay attention to, right? Relative strength, great for day trading, also great for investing because it helps you identify a turnaround. You can see it slowly inching out of oversold territory as the stock is slowly trading flat and moving incrementally higher. but you can see it's back, it's forth, it's kind of quiet, it's not doing very much. So as an investor, if I was thinking of buying the stock, I would look for one of two things. One, I would look for a slowing in the selling, right? So it's $50, Jesus Christ, it's $50, it drops all the way to 10. Ouch, bad earnings. And you can see trading into earnings, right, as I mentioned just a few seconds ago, really bad. This is an indication that people don't have faith in this company to produce really good earnings. Sure enough, I don't know what the earnings were. It says they missed by 30 cents a share. It hangs around for a little bit, and then it's just all over for this company. Boom, straight drop. Pre-earnings goes down to about $30 from $50, so down $20. That's pretty significant. Down $10. And then, boom, it drops. So as an investor, this is one area where you might consider getting in if it's a company you like. Please don't buy Occidental Petroleum just because I'm doing a video on it. By the way, this is for education. I'm just using this stock as an example. But this is one area as an investor where you would look at all the charts. Here's another. You can see now the MACD for the 3-month or the 6-month chart actually is working, right? On the daily chart over here, not so great. It's a little lagging behind. But on the 3-month or on the 6-month, look, just as it's coming out of oversold, it's also crossing over, and the stock is moving higher. This is another example of when you might want to invest. And last but not least is the breakout to the upside. Now it looks like we're down, we're flat, and now it could be potentially, maybe, sort of, kind of moving a little higher. So those are the things that I look at before I make a trade and or investment. And if you found this video helpful, please like, please subscribe, click on the little bell so you get notifications. If I missed something in this video that you have a question on, leave it below and I'll answer it. Thanks for watching and have a nice day. Thanks.